Hello and welcome to Perfect Channel. My name's John Anderson. Joining us today is our founder and CEO, Phil Bird. Welcome, Phil.
Thanks very much, John.
Are there certain industry sectors, certain size companies that are more conducive to working with Perfect Channel?
When we look at kind of what impact we can have to your business, marketplace or transaction, depending if you're a buyer, seller or a marketplace operator, the bigger that type of transaction or that market, the more effect we can have. So I don't think there's any one area that couldn't necessarily benefit from us, but from our perspective, we want to make the most impact. And so a vertical like commodities, where it's producing something physically from the ground or growing something or that kind of thing, that obviously has a lot of variability to supply and demand as well. And even at the moment, there's a lot of volatility in the marketplace around that. So what is the price of copper, for example, or oil? In fact, that's probably another topical one at the moment. How do you know what that is? And so using something which kind of helps to drive out the price through competitive tension, is compliant and transparent because everyone can see what's going on and there's an information equality, so everyone knows, is absolutely right for those kind of conditions in those markets. So our interest is in kind of the bigger commoditized markets and producers of things, but it does have applicability in all kinds of different markets and at different points in the supply chain. So building a car, for example, metal components, actually creating a car and then selling the car to someone else. There's quite a long supply chain there, and we can have effect at different points in that supply chain as well. And we do in some areas as well. So, there's not one good area. There's just things where we can have more or less impact on.
One industry sector that's in need of some support in obtaining pricing is the financial services sector, where we have a lot of stranded assets and a lot of illiquid assets. Are there opportunities for Perfect Channel in that world?
Definitely. I think there's a lot of noise around that, 4 or 5 years ago, and there still is a lot of problems that need to be solved there. And the problems are effectively that a bank or an institution is holding something that is very difficult to value. So who values it? Now the seller of whoever's valuing it, the financial institution, is going to put a value on it somewhere up here. And the buyer, most likely, because of the risk or the difficulty of understanding what's actually in that financial instrument, is probably price expectation is somewhere down here. So there has to be a process to kind of get them to meet some way. And that doesn't work very well if it's a relationship-based sale or something like that. You need a mechanism to help drive that out. And that's where we can make a difference, I suppose, John. That's where our technology works really well. What is the price of this thing? And the price of anything is only what someone is prepared to pay for it ultimately, right. Not what it says on a piece of paper or on a balance sheet. So, you need something like this to make sure that you have got the right price and that you can actually disaggregate the transaction and make sure that you've got some auditability around that as well.
Thank you, Phil. This has been very interesting.
Thanks very much for the opportunity, John.